Good morning. Before we look at today's signal, let's talk about what's keeping me up at night. Welcome to the VIXShield Daily Market Summary, Morning Outlook for Thursday, April 23rd, 2026. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution, signals only. Past performance is not indicative of future results. In this episode, we set the stage for the trading day ahead with fresh data, clear risk layers, and exactly what discipline looks like right now. The S&P 500 closed yesterday at 7,138. That was a solid gain of just over 1%, yet the move came with a noticeable pickup in fear. The VIX, our CBOE volatility index, settled at 19.2. That is up 1.73 points, or nearly 10% from yesterday's 17.5 close. It now sits just above its 5-day moving average of 18.5. The term structure remains in contango. The 3-month VXV reads 21.2, leaving a spread of roughly 2 points in favor of longer-dated volatility. For iron Condor traders, this is the normal, healthy state. It tells us the market expects volatility to stay reasonably contained over the next 1 to 2 weeks. That carry works in our favor if we stay disciplined on the wings. Overnight, the dollar index rose about 0.6%, while Bitcoin climbed more than 5%, and Ether added nearly 3%. Gold slipped 1%, and crude rose almost 4%. The picture is mixed. Some risk assets are pressing higher, yet the jump in the VIX warns that protection buyers are still active. And here's where it gets interesting. The economic calendar carries real weight today. Traders are watching the Chicago Fed National Activity Index and fresh commentary around Fed rate expectations. Those numbers could easily swing implied volatility one way or the other before the closing bell. Behind those market moves sit several important headlines. The Federal Reserve has now pushed expected rate cuts into late 2026 as tensions in the Middle East continue to fuel inflation fears. That delay keeps borrowing costs higher for longer and adds a layer of caution beneath any equity rally. At the same time, crypto derivatives volumes are climbing on the back of shifting rates, oil prices, and global liquidity. When Bitcoin and Ether both push higher, while the VIX also climbs, it tells you capital is rotating rather than fleeing. Morgan Stanley cut its gold price target to $5,200, saying the pricing logic itself has been restructured. That move highlights how quickly assumptions can change when real-world events collide with monetary policy. Meanwhile, analysts at LSEG are focused on how inflation, monetary policy expectations, and developments in the Middle East could reshape market reactions in the days ahead. And former Fed Governor Kevin Warsh's record is being studied once again for clues about where interest rates may settle. Taken together, today's headlines paint a picture of elevated uncertainty that has not yet turned into outright panic. Pre-market futures are modestly firmer, but the tone remains watchful. This is exactly the environment where our risk rules earn their keep. Now let's look beneath the surface at volatility. The VIX at 19.2 sits squarely inside the 15 to 20 caution zone. It is stable relative to its recent average, yet clearly elevated from last week's levels. Realized volatility over the last 10 days is only 10.4%, which means the options market is still pricing in more turbulence than we have actually seen. That gap is what gives iron condors their edge when the structure stays in contango. Our expected daily range indicator came in at 1.28%. The entry gate is met. Both the VIX level and the range stayed inside our allowable band. That combination is what opened the door for a place signal this morning. Now the strategy insight for today. The signal engine delivered a place verdict because the VIX remains below 20 and our expected daily range sits under 1.5%. Entry criteria were satisfied, yet with restrictions. Conservative and balanced tiers are available. Aggressive is blocked. VIX at 19.2, elevated but still below 20. Conservative tier is green, safe to place. Balanced is yellow, tradable, but size down if you are cautious. Aggressive is red today, blocked per our VIX rules. Remember on Tuesday we talked about watching the 15 to 20 zone carefully. This is where it matters. Our three ALVH protection layers remain fully active, even though new hedge entry conditions are not yet triggered. That gives us standard allocation inside normal contango. The short-term spike guard, medium-term wave shield, and long-term endurance hedge are all on watch, ready to offset 30 to 50% of potential iron condor losses in a 10% equity drop. Annual hedge cost stays modest, between 1 and 2% of account value. The theta time shift is in forward mode, targeting 7 days to expiration. With our temporal reading well above threshold and the VIX above 16, we roll positions outward to capture additional vega while the carry remains favorable. So the structure we watch for today is clear. Conservative strikes at 6,985, 6,990 on the put side, and 7,290, 7,295 on the call side. That collects 65 cents net credit with a maximum loss of $435. The balance strikes sit at 7,005, 7,010, 7,265, and 7,270 for a $1.10 credit. These are RSA verified levels, cross-checked by our Rapid Skew AI engine for today's volatility footprint. The place decision means we can act, but only inside the approved tiers and only with strict size discipline. That, frankly, is exactly the kind of environment we prepare for. The discipline lesson today is straightforward. A place signal inside the caution zone is not an invitation to chase. It is an invitation to follow the tiers exactly as drawn. When the VIX sits near 19, the difference between a green conservative wing and a yellow balanced wing can be the difference between a smooth week and an uncomfortable drawdown. Protect the capital first. Let the edge work second. Looking ahead, watch two things this session. First, any VIX push above 21 would flip us immediately to hold. Second, the reaction to the Chicago Fed data and any fresh Fed speaker comments will tell us whether today's contango steepens or flattens. Keep your eyes on the 7,100 level in the S&P. A clean hold above it supports the balanced tier. A break below it tightens risk to conservative only. If you found today's summary valuable, share it with a friend. Both of you will receive 14 extra days of free trial access to the full VIXShield podcast and signals. Your personal share link is waiting for you in your member dashboard. This market summary is brought to you by VIXShield, your protection against daily uncertainty. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution. Signals only. Past performance is not indicative of future results. This is VIXShield, your daily protection against market uncertainty.